Okay. Right. Thank you very much for your patience. I'm pleased to welcome you here now to session 4 of sub-theme 3, which is titled Scaling Up Access to Finance by Smallholders and Their Organizations to Promote Sustainable Landscapes. I'm pleased to announce that we have a very distinguished and diverse panel here today. We have Mr. Alfred Gichu from the Ministry of Environment and Forestry of Kenya. He is Head of Forest Conservation, Forestry and Conservation Directorate, and he will be our keynote speaker for today and join us in the panel discussions. We have Mr. Garo Batmanian of the World Bank. We have Mr. David Brand, the New Forests Chief Executive Officer and Founder. We have online Ernesto Sabado Giang, who's from RTI International in the Philippines. We have Mr. Alex Freeland from Komaza here with us. Online we have Mr. Petri Letonen of Particip. Here with us in person we have Mr. Gustavo Sanchez Valle, he's the President of the Board of Directors of the Red MOCAF in Mexico. That rounds off our panel for today. Just briefly outline what we're going to talk about in this session, and we're running a little bit late, so I'll keep it very brief. Smallholders, small and medium-sized enterprises and communities in low-income countries have historically struggled to access finance to improve and scale up sustainable practices. In recent years, greater attention has been given to government and market incentives for stakeholders operating at landscape level. These include a number of initiatives focused on producer organizations and SMEs to help them improve their skills to properly value their assets, integrate into value chains, scale up their operations, and develop sustainable businesses in the forest sector. This session will take stock of these recent developments, lessons learned, emerging good practices, and the work that still needs to be done. So I'll move straight on with the program and invite Mr. Alfred Gichu up to the podium to give us his keynote address. Thank you, Mr. Gichu.
Thank you very much, moderator, for that introduction. Appreciation to FAO for giving us this opportunity to share our various experiences with regard to land restoration activities, with regard to the need for us to scale up finance to support especially one of the key stakeholders that you seek to take up responsibility for delivery of national restoration efforts. Again, thanks to Korea Forest Service for an excellent hosting of this event that we have in Seoul, a beautiful city. I will provide some background information with strong reference to the country that I come from and where I have built a lot of experiences. Let's move to the first slide. Kenya is a low forest cover country. And that status has led to a number of negative environmental, climate, and economic impacts, and that has contributed over the last few decades or years to a very strong policy push for us to move to a minimum 10% forest or tree cover. And as part of that push is a presidential directive that directs other stakeholders in the forest sector to accelerate the achievement and maintenance of a minimum 10% tree cover. And as part of that, we have multiple policies and a number of policy level guidance that include a national strategy that has been approved by the Cabinet to support a broad stakeholder collaboration and partnership in support of the national 10% forest cover minimum goal. But the strategy that I've just talked about is a strategy for strengthening collaboration and partnership. It's about shared responsibility, and that will be implemented through a process that seeks to benefit from our respective capabilities of stakeholders within the country. We fully understand as a country that where we want to go requires a vision. We need to borrow strongly from international best practices in terms of innovation, but it also requires a very strong commitment from all of us. We see a very strong opportunity for us to benefit strongly from private sector capital and expertise, and a strong need for us to bring on board smallholder farmers in Kenya who are indispensable in the national strategy implementation process. The next slide. So what is pushing us? Why are we investing in forest restoration in Kenya? And I've just talked about some of the policy demands. Some of the policy demands are global. We keep talking about the goals on climate, biodiversity conservation, land restoration, but we also have national policy goals. We have a constitution that requires that we move towards 10% forest cover in the next few years. We have a vision that directs us towards that. Also, we have climate, environment, and forestry policies that also demand transformative approach to the way we do business. We recognize forest as a foundation pillar in Kenya. That is important for the success of agriculture, tourism, manufacturing, and energy that drive most of the economic activities. But we also seek to enhance the ecological integrity of the forests that we currently have and their functioning. And then we are talking about the global planetary crisis, climate change, biodiversity loss, and landscape restoration. But we cannot run away from the need for all of us to work with the community and support them in enhancing their resilience to climate change. We need, or we seek to broaden employment opportunities, diversify incomes, and improve livelihoods. The next slide. So the strategy in Kenya has a number of key areas of interventions. We want to support mass production of seedling for scaled-up restoration efforts. There are immense opportunities in the agricultural landscapes, in the arid and semi-arid lands for tree growing. Kenya, we are no longer talking about tree planting because you have to plant and take your seedling to maturity. So we are talking about tree growing in Kenya, but it will have to rely on seedlings for that, and we seek to invest in that. We want to protect the estate that we already have. The degraded public forest areas, we have a sizable area that is degraded. We seek to restore. More importantly, is an intervention around commercial forestry development. We have traditionally invested in a public commercial forest belt, but the government and the citizen are demanding that even that belt is reserved for environmental services. So we want to offroad timber production, especially to the communities. Let's have it grown privately, and that's why we are investing in commercial forestry development. Restoration of degraded landscape in the Azores. This is where livestock, most of pastoralism is practiced. This is where our national parks and game reserves are located. They are grasslands, but that can benefit strongly from investments in landscape restoration. Beyond there, we also have restoration activities around greening of our infrastructure. These are the roads, these are the railway lines, these are the schools and other government institutions that we have in the country. But we are also talking more and more about restoring our urban landscapes. Public awareness is an integral component of that, and as part of our wood production and sustainable utilization, we also have an intervention around improving efficiency. And the bottom line is a need for us to mobilize additional resources. I talked about abatement area. That abatement requires that we also mobilize additional resources to support our work moving forward. Next slide. So how do we proceed? How are we proceeding as a country? It's about doing things differently. The way we are doing, the way we are operating as a movement cannot take us to where we want. We need to scale up interventions. We need to scale up investments. We still think a strong need for the process to be government-driven. But we are talking more and more about broadening our stakeholder participation. And as has been shared earlier, we are particularly in Kenya talking about broadening stakeholder participation because of the land tenure system. Kenya land is owned, yes, partly by the government. We also have community land. And a big part of Kenya, the land is private. And you can see the need for us then to have the private sector and the communities be part of the national program that we've been rolling out. Mobilization of adequate and predictable finance, strengthen private sector engagement and community participation, and we also want to strengthen forest and tree tenure security in the country for reasons that I've just talked about. Especially in those land tenure systems that are community in nature, we have seen a situation arise that is normally called the tragedy of the commons. We want to extract, but nobody wants to take responsibility for restoration. The next slide. The role of smallholders in the country. As we speak today, the smallholder tree farmers, they produce about 50% of the wood requirements in the country. Previously, we have relied on Kenya Forest Service to provide most of the wood, but over the last few decades, we have invested as a country heavily on our farm forestry tree production to an extent where now 50% of our wood requirements are generated outside protected forest areas. But that said, we still see very strong opportunities for enhanced production, both in agroforestry and commercial forestry. We have situations in the country where opportunities, especially for commercial forestry, are extremely attractive. But as we discuss this, there's need for us to support those farmers so that they can take up the international best practices in production and utilization of timber, and for them to transition to a sustainable, economically rewarding, so that they can invest in efficiency and inclusive value chain. We also seek to interest our communities, to interest our smallholder investor, to invest in commercial viable businesses, which, as we have been discussing in Seoul, is a key to sustainable and resilient landscapes. The next slide. There are a number of challenges that have manifested in the process. Some of our smallholder producers, they are farmers, they are limited business development capacities. They are not very well organized, and their management capacities are equally limited. The scale of operations is such that it cannot, as it starts now, deliver on our national wood requirements. We have an expanding population. We are an expanding economy, and we need to continuously provide an opportunity for most of these wood products to come from public lands through commercial forestry. The scale of operations, we need to scale up. Most of them do not have a lot of information on the markets, natural resources use and management. They don't have a lot of access or awareness to processing technologies. And here again, we are talking about modern, efficient processing technologies to avoid what we have witnessed in the past in terms of wastage. Conversion efficiencies sometimes go as low as 20%. And then we also need to strengthen, as I've said earlier, the land and forest tenure rights. Insufficient capacity to access markets and lack of integration among market participants along the value chains. We also need, and that may not be fully available, to enhance our understanding of the standards that are needed for investments. The markets are becoming especially quite sophisticated in terms of quality of wood that we are delivering. It's important that the producers themselves have this information in their fingertips as we move on. The next slide. So what are we recommending? A lot of training so that the smallholder farmers are able to invest in bankable businesses. We want to link the investors with the project developers. We want to mentor the tree growers in approaching sources of finance. And we have a banking industry in Kenya that is fairly well developed to take up this responsibility. But we also want the smallholder farmers to be better organized in a way that they can inventorize their collective resources and access markets as a group. Do they understand the value chains properly? It's an area that we need to put in additional resources so that we can address the obstacles to their development and enhance their contribution to the climate change goals, the national development goals, but also in the context of sustainable development goals that we refer to quite often. The next slide. Now, as part of the capacity development programs that includes the smallholder farmers, and I want to thank the FAO and other UN agencies here. We have developed, or we are almost completing development of what we are calling the National 2 Billion Tree Growing Fund. That is a national-driven fund, and that seeks to accelerate the achievement of the national 10% forest cover. And what we want to do, we want to make sure that we have within the country sustainable finance that is able to sustain strong partnerships that can support strengthened governance as part of Kenya's commitment to the global and national goals that I've referred to. So the National Tree Growing Fund, we want to use it as an opportunity to enhance production of good quality seeds and seedlings in the country. We want to support our national research institutions that have capacity, but that is not strong enough to support these scaled-up efforts so that they can produce seeds. For seedlings production, we want that to be taken up both by the government agencies and the private sector with interest and capacity to support us. We want to pilot and scale up our technologies within the country for tree growing, invest heavily in mobilization and sensitization of the public. We are dealing with the two government levels in Kenya at the moment. We have the national government, we also have the county government, and especially for the county government, we want to invest heavily so that they develop land use plans that would allocate land for forestry development and other infrastructure, value chain infrastructure to scale up investment. Public-private partnership financing mechanisms is also an area we want this fund to support. Mainstreaming of tree growing across the country. And we also want to operationalize as part of this an innovative forest financing instrument that includes incentive schemes on payment for environmental services so that the private sector can be comfortable to engage, so that the private sector and smallholder farmers can engage effectively and invest in forest restoration actions. With that, I want to thank you very much, and moderator.
Thank you. Is this on? Thank you. Okay, thank you very much, Mr. Gichu. Please take a seat. Okay, so just thank you. That was a very interesting and informative presentation. Just to go over a couple of the key points there from the Kenyan context. The 10% goal for national tree cover, which is driven through international commitments and national policy, demonstrates a huge potential for the country to benefit from private capital, particularly to bring small farmers on board to help achieve this goal. 30% of the tree cover managed in Kenya is held by smallholders. There's clearly a strong opportunity for agroforestry and helping smallholders access commercial opportunities, but they have limited capacity, scale, market awareness, And there are efforts underway in Kenya to help address these barriers to smallholder entry into the forest industry through cooperative banks, equity banks, and now through the 2 billion tree growing fund, which is delivering substantial and ongoing efforts to help smallholders enter the forest industry. So I'll now hand over to our distinguished panelists, and in turn, I think there is, most of you have PowerPoint slides prepared. And first of all, please could I invite Mr. Garo Batmanian for your intervention. Thank you very much.
Thank you. Distinguished panelists, good morning, good afternoon. It's great to be here. For this session, I want to talk the case of the dedicated grant mechanism, which is part of the program that we do as part of the Forest Investment Program, that the bank is one of the implementing agencies under the Climate Investment Fund. But what I want to focus on is the lessons learned from that program in Mexico. I didn't know there was going to be another example in Mexico, but I want to draw the lessons from this one. So can I have the next slide, please? Thank you. The dedicated grant mechanism is a fully participatory process. Once the NGOs have been selected by the government, we work with them to define what do they want to do. So it's completely bottom-up approach for them to decide to do economic activities. And we had 3 clusters. We had in Yucatan, we had in around Oaxaca, and also in the west part of the coast. I'm going to give few examples. I cannot give all the examples, but just to give you a gist of what we did and the points that I'm trying to make. May I have the next one? So, this is one supporting a coffee production. It's sustainable coffee done in agroforestry by a community. I think this one is in Oaxaca. Next one. Next one. So that's what we is. You see, the forest in the shade is part of a. It's a small scale, but it's part of our agroforestry program, and it's focused on quality. So we sell it a better coffee, a premium coffee, and it's labeled as from the communities. The small communities provide their coffee to the government agencies or other cooperatives, and the organization is currently focused on promoting the renovation of cafezales, which are the respective production there. Next. We are now talking about another sub-project in Uzachi. Next. This one is the strengthening of capacities in forest productive chain through the production of commercialization of charcoal from the Union Zapotec, Chinaltec forest production communities on the Sierra Juarez, that's in Quintana Roo. It's a long name, but it's in southern Mexico. The community project manager has increased the production volume of its forests, mainly pine and oak. So this is just one example. In the case of the today, it's only 50% of the production is sold locally. With financing from our project, we seek to, and we are now already taking advantage of the remaining 50%, and we are now producing more in a more sustainable way as well. The sub-project stands out to seeking production with low carbon technologies. We're making more efficient cleans as well, so we're looking at the value chain as a whole. So we have more coal per public, more efficiency, more burning efficiency to make coal, but also we are managing the forest better. So basically, you are using far less wood, but it's something that they still need to do it. Next one. This is all selected by them, right? It's not we decided. So then in Ecotuchitlan, that's hard to pronounce. That's in Yucatan. The objective of the sub-project is to increase accommodation and space, improve the administration of ecotourism once, promoting through market strategy, etc. So you see different types of investment. On this one, with this participatory diagnostics, reduction of creation of tourist products, so we didn't have it, the marketing strategy, come and visit the community, what the community can do, can we have people doing handicrafts to support the community? So you see three different examples here, right? You see one example which is on forest, one is on agroforestry, one is on tourism. So as long as you have a landscape approach and the community, the small communities, the local communities, they decide which they want to do. We help them develop the business plan. We give them the technical assistance, as it was heard before, that is necessary to make it bankable projects. And we provide them with the initial seed grant for them to implement the project, but also do the capacity building and the technical assistance. And they have implemented the project properly, and all of them are having good rates of return. They are doing well. So the question that I want to put forward here, because we're talking about financing, is why this has not been scaled up. It worked. People, we proved it worked. We keep calling it a pilot, but something happens that the pilots are not scaled up. And the pilots are not scaled up because we're not necessarily looking at conditions necessary to scale the pilots up. We just hope that the pilot will scale up in itself. And we may have to look at the conditions better. So in this particular case, we took a look at the conditions. If you can go to the next slide, which is my final slide, is that participatory, the lessons learned, which are the good ones, participatory process work, but it takes time and we have to be patient. We cannot think that this is like the businessman coming here and getting done in 2 weeks. There are cultural issues. There are cultural aspects that has to be taken care of, how decisions are made in the community, who has to speak, how long it takes to make that, and we have to respect that. Technical assistance for business plan and implementation, that's what we heard before. We can help it, make it a bankable project and implement that later. The other one is that we need a group of stakeholders to be economically viable. And we heard this in several other places. Sometimes we don't have the economy of scale to get the market. If only one smallholder is going to produce sustainable or good quality sustainable coffee, it's not enough to reach the market. I'll give you one. I'm citing here to give you one example of completely different thing. When I went to work, when I was working in Brazil, and we produced it heart of palm, which then we were very proud. The community went there to one supermarket, and they said, oh, this is a very good product. I want to buy this product. And they said, and then we asked, how much do you need? And they told us the volume. I says, great, that's what we produce a year. And then he says, no, but then you're not understanding. That's what I need a week. Because I cannot put a product on the shelf for 1 week, the customers likes it, and then for the next 51 weeks, the customers keep asking, where is that such good product? We are going to look bad. So we didn't have volume enough to supply one large supermarket in Brazil. And so we need to, the third point is we need to group the smallholders, sorry, it's a typo here, to be economically viable, to have a scale enough that we can participate in the market in a better way. Finally, we have to think of complementing income. In some of these projects in Mexico and elsewhere, we can consider that if it's part of a payment for environmental services because you're maintaining the water, you're maintaining other carbon, you can get some payment to complement the income with payment for environmental services, right, et cetera. What are the challenges? The challenges are the ones that I just mentioned quickly. When the next community, one community that was promoting coffee, then the other communities, other villages decided, oh, I want to get into this business, and they went to a commercial bank and said, look, we can make the money, this is the business plan, this is the rate of return. Then the bank says, what's your collateral? The banks did not accept standing forests as a collateral. They didn't have buildings. They didn't have anything, big trucks or something. They didn't have assets that the bank considered as collateral. So that becomes a problem. The second part was loan terms. Most of the loan terms available were thinking of annual crops. So if you have an annual crop, you're planting soybean or sunflower or whatever, you have 6 months grace, 1 year to pay, because after 1 year, you already harvested. 1.5 years you harvest. But here, if you're planting coffee, if you're planting oak, it takes a while for you to develop, and you have to keep investing for 1 or 2 years, even before you start making any kind of income. So the terms of the operations don't seem to be offered, are not compatible with the smallholders and the type of operations we're talking here. The third point is that we have subsidies for agriculture, and OECD decided to calculate that $500 billion of harmful subsidies going for agriculture, but we don't have a subsidy or a tax break. Maybe if the community is producing sustainable coffee, we should consider that maybe that can be a subsidy for a loan, or that could be considered part of, give a tax break for their production until a certain level. Those things are not there. So it also hinders the possibility of making income. Finally, which is what we did, we may require grant funds for the initial TA, which is what we did, but we did it for, the best one I can explain is the coffee one. We did it for the coffee, but the other communities then could come and visit the community that was doing well, and they wanted to do it there. And they could have disseminated among themselves with longer hour participation if they could get the credit. But the initial one, and is a place that has not done this before, may require some grant money for the startup or the pilot, but only in the beginning. Once they get going, if you address the other 3 points, we probably can do it. So my message is smallholders can and do generate good businesses. There are certain particular aspects. If we address certain particular aspects, they can participate in the economy, they improve their livelihoods, they maintain the forest. As long as we address those topics, it can be done. Thank you very much.
Thank you very much, Garo. So just to recap some of the key points there, what's happening with the dedicated grant mechanism in Mexico is that this is helping smallholders in the forestry sector to focus on quality, not so much quantity, to get the maximum benefit from the market for wood products that they are licensed for, focus on increasing value added and providing support for business planning. But these efforts up to date have not been scaled up perhaps as much as we would hope, and the reasons for this are quite often looped into the financial barriers to smallholder participation, including the problems with collateral and the fact that financial products, and loan products in particular, are not structured or developed with smallholder needs and limitations in mind. So with that, I think we have Petri Lehtonen on from Particip, beg your pardon, online and ready to join us with a short presentation from his side. Can we get Petri online, please?
Can you hear me?
Yes, thank you. We can hear you. Please go ahead.
Okay, dear participants and distinguished fellow panelists, it's really a pleasure to be with you. Even it's a pity that I cannot be there in person. So just to clarify that I'm at the moment I'm one of the experts at the Forest for the Future facility. We are advising European Commission in future forest interventions globally. So I think that just listening the fellow panelists, I think that we all agree that we have really emerging need for investments, more investments in forest landscapes. And well, meaning forest land restoration, plantation development, agroforestry, and overall sustainable forest management. At the same time, actually there is lots of money in the world. There are like many development finance institutions, and there are many funds private funds, other investors who have made pledges to invest in forestry, in especially in developing countries. I think in Glasgow, there were many pledges made. But however, I guess this is the problem that we tackle here is that especially in the poorest countries, there are really limited opportunities for investments. And the risks are too high, I guess, and really the number of bankable projects, it's not that high. So the question is, what can we really do to make forest businesses bankable? Next slide, please. So I think the first point that we have already heard is that we really need value chains. We need to value the forest assets and generate benefits, whether it's wood, non-wood forest products or ecosystem services, as long as there is a kind of real mechanism to add value and generate benefits. And here, if we think, I just pick up some points very briefly. So first thing is scale. I heard already a mention of scale. So the scale is needed in actually along the value chain in many different parts. And first, I think the smallholders. We talked already about smallholders organizations. So it's important that we can scale up the producers, and all these efforts to organize the producers are extremely important. It also thinks that there are communities who are managing forests. So it's important that these communities that they become like companies. They will have commercial structures that can be scaled up. That's the key issue. Well, if we go along the forest, let's say the value chain, I have here, you can see the example, there is actually a wood value chain, but also could be non-wood product value chain. We need scale in processing. If we look at the companies, it's important that we have some, let's say, serious companies, maybe a little bit bigger companies that really can put in some patient capital, really can invest in technologies. And if it's a question of wood, something that they will have a higher wood pay capacity. This way they can pay more also the smallholders of the resource, and they can use the raw material more efficiently and can have a better access to markets. And these companies, when we have some bigger companies, they can nurture other companies. So it's important that in the value chain, we can kind of create a cluster where we have many companies and also like smaller companies that can use the residues in a nice way. So that's important. And then I think that the other point is markets. It's obvious. But then we have different markets. We have local markets, regional markets, global markets, and it's important that we can have different market channels for different products, and that is never overlooked. After that, we assess the profitability and sustainability of these investments, and that way we can kind of come up with a bankable business plan. Of course, it needs a little bit more than that. And that bankable business plan is something that we can present to the financing institutions. But then we have again a problem. We already mentioned that when we go to the, like Karo Patamanian mentioned, when you go to a local bank, well, you need a collateral or maybe just the terms are not very good. Money is very expensive, loans are very expensive, and they are very short term. So these local financial institutions end up probably financing only working capital, and this kind of serious long-term investments doesn't take place. And then when we have funds, let's say bigger investors, development finance institutions, yes, they have money, they can give nice financing, whether it's loan financing or equity financing, but normally the ticket size is very big, so it's a big sum of money, and the projects probably are not that big. So here, the important is the role of intermediaries. I think in our first presentation from Kenya, this was mentioned. So we need local banks, maybe also producers organizations or industry associations who can act as intermediaries and further lend these financing through the finance like smallholders or producers organizations. And then, of course, important part is the governance. And it's not only about government agencies, actually it's all the stakeholders. We need a good governance when it comes to companies, when it comes to communities, and actually all stakeholders. And with that, we can gradually create a better business environment. So I was advised that we will have very short stake here in the beginning, so I'm not going to talk too much. So I was just scratching the surface here, and I must say that I was privileged to work with an FAO team, Marco Boscolo and Alex Bra, and we prepared a learning guide for forest producers and companies, how they can prepare bankable business plan, what is needed. And this was very much based on our practical field experiences in different countries, for example, Kenya that we had here. So that was a very important example for us. So I wish that after this, we can have a good discussion on this topic, and I'm here waiting for your questions. Thank you very much.
Thank you very much indeed, Petri, and some very thank you for your being concise, and just a couple of key points I think you raised which are worth stressing. Again, as we've heard already, the importance of scale required along all parts of a forest value chain, the importance of enabling smallholders to form groups and associations so that they can behave more like viable businesses and companies. The support, the area of support that is required to maximize the effectiveness of group associations in the forest sector, including enabling governance and business environment, the market outlooks and studies, financial analysis, risk assessments, including environmental, social, and governance risk assessments, and the fact that smallholder groups will need intermediaries to help them achieve these, or to help them deliver these services. Thanks very much, Petri, and we can move on now to our next speaker, which is Alex Freeland. Alex, please.
Good morning. I am here representing Komaza. We are a forestry business in Kenya, but with a bit of a difference. And that is that we believe that smallholder farmers are vital to sustainably meet the timber needs of sub-Saharan Africa, and we have built our business around them. Now, I think Alfred has already made the case for this model. So what I'll do is share a bit of the perspective of an enterprise that has been working with smallholders for the last 15 years. So, yeah, a bit more about Komaza. It's important to note that there is a huge and rapidly growing supply deficit for timber products across Africa, and therefore an urgent need to increase local production. What we see is that the sort of traditional large-scale plantation models that work very effectively elsewhere in the world are often kind of highly complex and expensive in the region. And that is because we see high population densities in areas that are suitable for forestry, which then drives up land prices, and we also see other kind of land tenure issues. Whereas smallholder farmers already own and control the vast majority of land that is suitable for forestry. They have huge labor resources, and they're generally looking to diversify their on-farm activities to build and increase resilience. Accordingly, they're perfectly positioned to deliver all the wood, all the timber that we need. They do, of course, still face a lot of barriers to participating in forestry, including kind of value chain access and access to finance and a number of the other items that have been discussed so far. But that's where Kamasa steps in. So our partnership model has been designed to remove those barriers to participation, so farmers can engage with and benefit from commercial forestry on their farm. That also enables us to increase tree cover. Alfred was referencing the 10% tree cover target in Kenya, and sequester huge volumes of carbon on the sort of degraded or generally degraded land that they own and manage. And given the challenges that I referenced above for large-scale plantation businesses, this actually enables us and our farmer partners to produce high-quality timber at a fraction of the cost of traditional models. So yeah, we are very ambitious. Sorry, can we move on to the next slide, please? Yeah, very ambitious. To date, we've developed 8,000 hectares of new commercial forests. This year alone, we're looking to develop over 1,500 hectares. In the short term, we're really focused on scaling up our model in Kenya, and there's lots of opportunities to continue doing that. But in the next few years, we'll start looking into international markets, primarily in sub-Saharan Africa, but we believe this could be applied further afield. So yeah, I'd love to move on to just some of the challenges we faced and solutions we've identified to address them. So if we can move on to the next slide. I think this is, these points are going to reconcile quite closely with the presentations that have gone before me, but it goes without saying that no individual portion of a value chain can thrive alone. We started off focusing exclusively on tree planting, but quickly realized this would never succeed and would never be able to raise the financing it needed if the farmers couldn't access high-quality seedlings and inputs and didn't have access to a reliable and fair offtake market. And so we then invested heavily in these areas, and you'll see our nursery in coastal Kenya, which can produce 3 million seedlings a year and is the largest commercial seedling nursery in the country, and a new processing site in central Kenya. We've had the pleasure of inviting Alfred to visit both of these in the last few months, and hopefully this is addressing the need that he referenced for modern and efficient processing facilities. Now, I think it's important to note that while we're obviously focused on the timber value chain, we see these barriers being very relevant for kind of non-timber forestry, or these barriers are relevant in preventing farmers from participating effectively in non-timber value chains. So we can move on to the next slide, please. So access to finance is now the largest barrier to our growth. As we all know, forestry assets, particularly timber forestry assets, with their very long payback periods are particularly hard to finance, and this doesn't change for smallholder forestry. So what are we doing on this front? So we're in the final stages of establishing a carbon program, and we'll sell our first credits this year. The additional income that this will generate will reduce the total capital need for us to establish and manage new plantations, enabling us to scale faster, but also enabling us to increase the benefits that accrue to farmers. So this is going to have huge impact for us. But I think it's worthwhile noting, and this has been referenced before, that the standards and methodologies that are in place at the moment really haven't been optimized for smallholder participation yet. And if we want this to catalyze greater adoption of forestry by smallholders, things we're going to need to change. And then lastly, the smallholder forestry vehicle. So more than anything else, what we need to grow is access to the tailored patient capital that matches the cash flows of our forestry assets. Now this is what, excuse me, every single commercial forestry business requires. But yeah, to date, patient capital investors have not been able to support us. And this is because the kind of the risk profile of our nascent, operationally complex, full value chain, smallholder focused business model just doesn't fit with their risk appetite. So accordingly, we're in the process of launching an SPV structure, which is illustrated on the slide to my left. And this is going to enable us to carve out the tree assets that we develop from the rest of our business through the growth phase of the life cycle, which is kind of low risk, very predictable, and finance them separately to the rest of our business. And then given the limited understanding of these assets by investors, we're going to work with development funds and develop a blended finance approach to raise the full capital need for this project. Now, to many of you, this may not sound particularly innovative. It is simply applying best practice for project finance and development finance, just applying it to new assets. However, the challenge really is designing and structuring an SPV that accounts for the unique nature of these assets, distributed widely across tens of thousands of farms, all with individual land ownership, and then also the stakeholders involved. These are kind of highly vulnerable smallholder farming communities. So anyway, we're working towards launching a $50 million fund in the next 12 months. We're currently fundraising. And this is going to be transformational for us. But moreover, what we hope is that this will provide a pathway for other timber and non-timber value chains that are working with smallholder farmers to finance the growth of their operations. Thank you very much.
Thank you very much, Alex. And this, I think, complements well what we've already heard from our other speakers. Komaza is presenting us with a potential solution to address these barriers within the current financial industry and structure in countries like Kenya, by developing the smallholder forestry vehicle, an approach to SPVs that is structured specifically for these vulnerable actors in the forestry sector, and as well as enabling the smallholders to access infrastructure required to make their businesses viable, like nurseries, processing facilities, ensuring that there is a market ready to take their products. This program, the $50 million fund that Komaza is working towards, will go a long way towards ensuring that these smallholders have a long-term viable business model. Okay, next speaker is David Brand, please.
Ben, shall I just sit here? I'm just going to talk
Absolutely, David, as you wish. Yes.
Okay, well, thanks, Ben, and welcome everyone. Great to be here with this really interesting and diverse panel. So I'll talk today about bringing private capital into community partnership models that can, both create a synergy between community development and investor returns. Quickly to introduce New Forests, we're an investment management business, our head office in Sydney, Australia. We basically have large institutional investors as our clients, so pension funds, reinsurance companies, endowments, foundations, so on. We manage about $6 billion of assets across 1.2 million hectares in Australia, New Zealand, Southeast Asia, United States, and most recently we've opened an office in Nairobi to operate in Africa. We manage timber plantations, agricultural lands, timber processing, export trade business, and dozens of carbon projects across the land base. Our three kind of objectives or missions as a company are to support the role of forestry as a natural climate solution, to support the role of the forestry sector in the transition to a circular bioeconomy, and to create investment strategies that generate both great returns to our clients as well as positive outcomes to the communities where we operate. So forestry investment, started from investors, pension funds, and so on, simply buying slabs of forestry land and managing that for operating forestry. Of course, it was important to have good relations with communities and provide safe work for employees in the forest. But it was a relatively straightforward business model. What's happening now is investment flows into the forestry sector because of climate mitigation and other opportunities are expanding. We're seeing more geographic diversification of investment flows, and alongside we're seeing significant new climate finance and increase in new plantation development, afforestation type of projects. And that's increasing the complexity of the nature of the asset class, and it's raising new social issues that need to be addressed by investors. Just some examples of that. Operating in Southeast Asia, we find sorting out land use rights and reaching agreements with communities can take 2 or 3 years before a project can commence, and that in economic terms is a significant transaction cost to investors and tends to repel investment. We're seeing high carbon prices in places like New Zealand that are causing economic dislocation in land use. So New Zealand, with a carbon price of 80 New Zealand dollars, or about 56 US dollars a ton, most sheep farming countries are better to just be planted up with trees. And of course, a lot of the farming community is opposed to that, and so there needs to be a much different approach to thinking about how land use change can be done. Social issues, bringing in labor from outside rather than local labor. It's important really that investment generates economic development to the communities where we're operating, not based on imported labor. So looking at some of our investment strategies, how we've tried to grapple with some of these challenges. In Tasmania, we've set up a small $50 million kind of pilot fund that will do community-based reforestation programs. So we started with 50 farmers who we sat down at their kitchen table and talked to them about their farms and areas that they might be interested in reforestation or restoration projects. And then we co-designed an investment strategy with the rural farmers so that it was designed to meet their needs as much as the investment objectives. And that has worked very well, and I think it's a model that we can expand elsewhere. Secondly, an example from Laos, where we have a 14,000 hectare plantation south of Vientiane. We set up an outgrower scheme with local farmers where we provide the seedlings. They can plant maybe a hectare of trees on their farming areas, and we've then set up a veneer mill and a sawmill. So when we come to harvest our trees, we can also harvest some of the farm outgrower programs and pay the same timber value to them and process the wood in a regional processing center. So it creates a good diversification of income, and in some ways it also is a kind of an adaptation strategy that if you have a hectare or two of trees that you've grown out for 7 or 8 years and then you have a bad year on cropping, you can always harvest some of the trees and get some cash income. So it also works to support that kind of risk management. We have a program in the United States where we've worked with about a dozen Native American tribal communities called Forest Carbon Partners, where we work with those communities and develop forest carbon offset projects associated with forest conservation projects on their land. And we've delivered something like $250 million of revenue to those communities through that partnership-based model. And our most recent program in Southeast Asia, it's called the Tropical Asia Forest Fund 2. It's a blended finance structure. We have about a $50 million impact tranche in that fund, and that impact capital, it can be invested in community development projects, biodiversity enhancement, restoration, conservation, that can create supportive investment programs that don't necessarily need a return, but can be linked then with the core commercial investments and perpetuated alongside those core investments. So I guess in closing, I'd say particularly the shifting economics and the shifting imperative towards climate change mitigation is driving land use change and a new kind of land use economy. In order for that to progress successfully, I think we need very strong community engagement programs and benefit sharing, creating win-win outcomes and win-win transition processes. And lastly, these investment models are a lot more complex to implement, and we'll need things like blended finance structures and aligned capital sources like grants to make the whole thing work successfully. Thank you.
Thanks very much, David. And I think a focus on how the forest investment industry has evolved over the last few years is really quite an important angle to understand, that it's become much more complex in response to the climate crisis, as well as in response to the more complex requirements and standards that consumers demand and investors demand from the forest industry. And the New Forest's range of approaches to try and respond to this, including co-design and investment plans with groups of small farmers, a model which has potential to be exported in a number of different countries around the world. Outgrow program in Laos, which through supporting farmers to plant trees on their land, then associated with the New Forest plantations, can be supported in realizing that the value of those small plantations as a means to diversify income of smallholders, and the TAF2 impact tranche, which can bring a wide range of co-benefits to the wider portfolio of forest investments. So thanks, David. We are probably going to be quite limited for discussion time, but we have two more speakers. One here with us on the panel here, Gustavo Sanchez Valle, please. And Gustavo will be talking in Spanish, so please have your earpieces ready.
Muchas gracias, moderador.
Yes, thank you.
Reciban un saludo de las organizaciones forestales de México, agrupadas en Red Mujer. Un saludo de
I am here from Red Muca, Mexico, which is the Forestry Association, and Costa Rica, Honduras, Mexico, Panama, and Central American land funds are all incorporated. Thank you for giving me this opportunity to be with you. And also, I would like to thank the Republic of Korea, the government, for providing such consistent forestry policies, and I hope that this vision can be shared with other countries as well. Today, I would like to share with you some financing initiatives that we have, which is the FTM. Now, the goal of this initiative is to provide financing to local communities in our country. Next. Now, the AMFP works with other organizations and agencies on a global scale to do multi-asseted analysis to see how the funds are flowing and how financing is being done. And we were able to find that most of these systems, the financing systems, were scheduled and led by governments and agencies, and they were focused mostly on cutting carbon and reducing carbon emissions. And they were overlooking other aspects, such as issues of land. Also, there are high costs that were incurred in this process, and this process is extremely complicated and overlooks issues related to forestry. And although there are needs and demands, it's quite there is a huge need to encourage more participation. Now, this slide shows the flow of various finances related to forestry. And you can see that only a small part of the resources actually go directly into the land. Less than 10% of the investments made actually reach the land itself. Moreover, within this particular flow, all of these projects are being conducted in a top-down manner, mostly state-led or multilateral organization-led. And so our proposal is as follows, is that the locals, their communities, need to be directly supported, and also we need to support their rights and create a channel which is low cost and also is more transparent and also shows us measurable deliverables, which can also address issues such as deforestation and also help the restoration of forests. And so what I'm trying to say is that we need to be more strategic in our approach. As was mentioned from our speaker from the World Bank, why don't we have more creative and more varied cases? I'm sure that we will be able to come up with more diverse approaches to financing our communities. And this brings us to how we came up with the FTM and our journey. Now, this idea was first proposed 10 years ago. Our cooperative partners chipped in, and we were able to come up with various experiences. We're currently in the pilot stage, and it was launched with a fund of $800,000 from CLUA, and there were countries such as Guatemala, Costa Rica, Honduras, Panama, and Mexico took part. 10 or so countries and organizations took part. And what is innovative is that the financing that took place here was able to enhance the governance capacity and also was a lot more economic and was more strategic. And through this kind of an innovative process, we want to make sure that we not only get our returns on our investment, but also make sure that it streamlines our operations more, although we will have to do an assessment later on. So we are working very hard to make sure that at least 80% of the funds go directly or reach the land, the farms directly. And also, we find it's very important that the receivers of the funds have a say in how they will be funded, so that they are taking part, therefore, in the decision-making process. So regardless of the volume of finance, what we are trying to do is create change in the process. And the vision that we share is that we do not want to replace the government. That's not the vision that we have. However, we want to support the government so that more funds can be used in a better way to support the territories. I won't go into this slide in detail today, but through this diagram, you can see how the FTM is organized and how the funds flow. You can see how the various committees take part in deciding the priorities. And what's important here is that it is a process that is not top-down, but that the needs of the territories and local communities are reflected in this process. And I think this is key in creating change and innovation. Now, these are some final takeaways. If this kind of financing mechanism is to be successful, we need to, first of all, ensure the rights of the players. And also, we need to invest directly into the value chain. Also, we need to create an authentic finance flow so that the funds are efficiently delivered to the territories, to the local communities. And to this end, we have many players that are collaborating with us to share with us their experiences. And in October, I think that we will be able to share with you our experiences, our results, how this has worked out in other areas, such as other countries in Latin America and also Africa. And I think that we will all come together to come up with good lessons for how to create a better financing mechanism. And we want to move as a collective so that no one is left behind. Lastly, I would like to underscore the fact that this kind of financing initiative is focused not on replacing government mechanisms and initiatives, but to make sure that finances are more efficient. Thank you very much for your attention.
Thank you very much indeed, Gustavo. I think this is a very interesting complement to what has been said before. The work of FTM in helping to support governments in tailoring the delivery of public finance to forest-based communities, addressing the problems that have been observed over years, that many of these finance flows, particularly recently when they are focusing on incorporating climate finance, often overlook complicated land issues at the local level, are high cost, are complex, and need to encourage more participation. And so we look very much forward to the outcome of, as Gustavo said, later this year, of experience in Latin America and Africa through this $8 million fund from the Climate and Land Use Alliance. We are nearly out of time, and we have one more presenter, so I think we're not going to have time for any discussion at all, unfortunately. But if Ernie Giang is available now, Ernie, can you hear us?
Can you hear me?
Yes, we can hear you. Okay, Ernie, please go ahead.
Yeah, can somebody do
the slides will come up. Here we are.
Yes. Yeah, I think I sent my slides earlier.
Yes, they are here, Ernie. Please go ahead. Can you see them?
I can share my screen?
Yes, the slides are being
I see it. Okay,
projected.
thank you.
Okay.
Yeah, this is just a good short presentation, but I am from the Philippines, and what I'd like to do is to share to you our experience in establishing landscape-based payment for ecosystem services for reinvestments in forest lands and protected areas in the Philippines. It is an internally generated source of fund for restoration and for development. Next slide, please. Yeah, this is the background. We tried this approach in several landscapes in the Philippines. It is there's been a lot of pilots on payment for ecosystem services in the Philippines and in other countries, but it has never been scaled up as a major source of financing for restoration and management. So what I'm going to share with you is basically an experience that we have in one of those sites. The method is very straightforward: governance and science-based techniques for assessing landscape, including issues and threats that affect sustainability. And you see it in the map, the sites that we have composing of 4 watersheds, but we will only present data for 1 watershed. Next slide, please. Yeah, we just called the different methods and steps and processes for establishing PAS. First, we did the landscape and watershed assessment, which is biophysically delineated. We did valuation of ecosystems, goods, and services using cost-based valuation of how much will it cost to protect, restore, work with communities, manage the watershed, and so on. And then we had consultations with all the enterprises in the watershed or near the watershed that depend on the watershed as their source of water and other ecosystems called services as inputs to their business operations. So we have the valuation side, and then we have the cost and revenue analysis side for the enterprises. And based on those data that they have, we gathered them together, and we simply agreed with we facilitated the process of negotiation and agreed on the PAS rates on how much each of them are willing to contribute to restore and protect the watershed that support their business operations. And of course, the agreement was provided, was laid down, endorsed by the board, by the respective boards, and agreements were signed, including the setting up of the collection and expenditure system, and agreements on where and how they will reinvest their funds within their watershed. And that's basically the process for landscape-based process in establishing payment for ecosystem services. And the results are pretty much straightforward. If you see in the slides, for instance here, the major ecosystem services that are being used are water, recreation, and soils. Recreation mainly from the unique attractions in the sites. And these are being used by 112 enterprises in 6 industries. And one of these big industries, of course, the Dole Philippines, which produces pineapple, bananas, and other fruits. Most enterprises are not paying the use of ecosystems, goods, and services as inputs to their business operations. And when we did compute the annual discounted cost per hectare for cost of protection, restoration, and management is about 1,400 per hectare over a period of 10 years. And for water, for instance, which we do the calculations, is the cost per unit of water per cubic meter is about 0.008 centavos US dollars. And what we have found is that payment for ecosystem services is a major source of internally generated fund for protection and restoration. We have worked with 112 enterprises, 64 actively participated in the whole process, 34 signed agreements, 39 signified commitments, and for the total costs for the 10-year projected cost for restoration and management of the watershed, we were able to get commitments from the 34 enterprises who signed agreements for about 7% of the total cost. There's a potential in this case to really generate more PES revenues from the other enterprises, but the process was stopped because of the pandemic effect back in early 2020. And there was so much interest on the part of the local governments, and so 2 provinces signified interest, and we helped them develop provincial policies for scaling up in the watersheds within their province. And as far as I know today, one of them has signed the policy for scaling up. And the conclusion is that if we use cost-based valuation, which is easy to understand compared to other methods of valuation for watershed, combined with cost and revenue analysis of the private companies, just to determine the level of profitability as a basis for negotiation, it is actually a major source of funding for protection of the remaining natural forest, the restoration of degraded areas, helping communities establish perennial-based agroforestry, and helping them access social and infrastructure funds for their own development. Thank you very much for this opportunity to present what we learned from the Philippines. Thank you.
Thank you very much indeed, Ernie. And I think this is a very interesting presentation to end on, a practical example of payment for ecosystem services in the Philippines, which is presented as one way of helping direct finance from the private sector to smallholders and forest-dependent communities, and in this case, through 34 agreements with enterprises signed, potentially contributing to 7% of the restoration costs in the watershed. So I am afraid we are over time already. I have to go off to another event as well, for which I'm late. So I think, unfortunately, we have no time at all for discussion, but it's been a very rich series of presentations. I think I've certainly learned a lot, and it hung together very well. So it just remains for me to say thank you very much indeed to all the panelists, and to Ernie and Petri online. Thank you very much, everybody, for attending, and I wish you a very pleasant rest of the day. And if we have been asked by Korea Forest Service to stay here for a couple of minutes to be felicitated or something.